Hey guys, welcome back. November the 10th. It's Wednesday. Hope you had a good day in the market. What happened to the market today? Look at that huge fatty red candle on TLT. Here's GameStop, came down. Tesla, we're gonna go over options and go over Tesla, go over the bonds. Not really the bonds, I don't understand them well enough. But sub up, like up, comment down. Happy money sticks around. We have a Twitter right here at Happy Money YT. Follow us on there. I mean, it's typically just posts of videos that you're watching right now, but sometimes I go on little Twitter rants. There's our Discord. You can get on there too if you'd like. It's in the description. It feels an awful lot like Christmas is coming, and maybe before the end of December. I thought squeeze this year, and I still think that. And today's price action and everything looks like market has definitely gotten scared. Inflation numbers came out 6 point something, highest it's been in 30 years, and I think that's adjusted because the way they do inflation numbers now, they've redacted different parameters on it, so basically it looks way better. In the 90s we had this high of inflation, but that's when, again, the way they the different sectors they tested was many more, and I think we have a lot more inflation in these different sectors that they took out. I'm not going into the details, but awful inflation numbers, worse than again, it's been 30 years since we've had this bad, as well as the streak of inflation that we've had. It's worse than it was in 2008. This is just inflation, this is just one metric, but it's not sustainable. So here it is in pretty purple for computer share for you to see. We've looked at this before. So CPI numbers, 2008, 4.2, 5, 5.6, 5.4, 4.9. The crash was basically right here, September to October. I mean, the market was in bearish territory for these like 3 months or so. And then this was the crash, as you can see. Then the inflation numbers dropped way down. Today, the inflation numbers came out 6.2. So it didn't hit that high at all in 2008. And the average on that year even was 3.8. And after today's inflation numbers, we're at 4.3. And again, I think these aren't adjusted. So this is basically a soft version of inflation that I think we even had in 2008. I think they've been adjusted pretty recently, but you can go look into that more if you'd like. Today, the market really sold off because the bond auction that came out, I guess, put a scare in the market, and inflation wasn't doing a whole lot. That inflation number, if you spoon feed bad news, the bad news doesn't taste so bad after you've had a few bites. And so until it actually tips the scales. So I think we're getting there. I am excited and nervous because this could be a very bad crash. On the daily chart, we'll go over a little TA. Daily chart, it could just be consolidation, honestly. It could be that, because we're still high on the RSI. MACD hasn't crossed over, but the price action during the days is a lot more telling. Just how it sells off, the amount of volume, the amount of velocity is showing that the market's definitely scared. We've got a bear flag here, and then just sell off. It wasn't as awful today as some individual stocks like Tesla. And I think they're probably, as the SPY and the more growth stocks sell off, we're going to see rotation into value. Different value stocks would be safer stocks like a Ford, or I don't know, some brick and mortar probably would be value. Dividend stocks, those would be value. So might start seeing a rotation to that, and then crash. So if you look back, we've done this a few times, but we'll just briefly do it. So this whole time, this is 2008. So the inflation numbers in September, I think. So here's October. That was October, the crash in the market in 2008. So pretty much the month of October. But it had been coming down for months. And that was when the inflation was just rising. So the difference now is our inflation has been rising, but we have just been going up. So yeah, very, very far detached from reality. The market is presently. So Anyways, 4-hour chart, bearish MACD, red under the 9. I think we're going to come down. I think this was a blow off the top, and we are going to come down. China, Evergrande, I've heard rumors of it's defaulted. Hard to know what's true, even if it comes from China. Hard to know if that's true or not. That will definitely have an effect on the world economy. Huge fatty red candle on Tesla yesterday. We made pretty good on this one so far, and we're just kind of getting we just keep riding this play. Actually, it's kind of fun what we did on it, and hopefully it works out pretty well. I mean, it's worked out well so far, but we'll go over that. Options, GameStop coming down, kind of like we were saying, down 3.3% or so today. Max Pain this week is 205. Not sure if it'll close up there or not. Again, I was saying kind of a 200 support was my highest, I guess, and then after that was 190 right here, and then maybe 175. Might take till next week to get down there, though, if it is going to get down to that 175-ish area. But for now, just nice mellow drop. The SPY hasn't gone crazy drop yet. I mean, had pretty good price action today, almost a whole percent down, but just been individual stocks. Like, I mean, Tesla was a big one for sure, down like 11% yesterday. So if the SPY really pulls down heavy, we'll see how GME does. And now it's kind of, to me, it's just like a kind of just seeing how far down the SPY and the overall market goes and how GME reacts. If it comes down heavy with it, how far does it come down, and when does it start inversing? And that's kind of what I am curious to find out. It's going to be very, very exciting to watch. The gag order on that RC had, I guess it was, people were saying it wasn't until March of next year. Apparently it's up in 2 weeks. So this is user, I don't know, whatever that is. So apparently it's up November 23rd. That's next Tuesday. So I guess you can talk then. Very, very interesting if he starts talking. Ooh, it's exciting. So anyways, let's go over some of the options. GameStop's coming back up to VWAP here a little bit. We've got about, 40 minutes left in the market. SPY looks like it wants to climb back to VWAP also. Tesla already has. Let's see what's going on here though. So I kind of close out of some of my long position swing trades with shares. I think market's going to start pulling money out of speculative stuff. So took some loss on some of it. I'm not closing out birds. I'll hold that. I might want to put that in long term at some point. So I closed out a Newegg, took a little loss, closed out of, I don't know, whatever other swing shares. Newegg, BRPM. BRPM was a SPAC. Yeah, we'll see. I just kind of want to cash balance once the market starts coming down. So here's the Tesla play that we did. Started 3 days ago, opened the put on Tesla, an 895 put. This put went up to 260 something % yesterday. I'm running you guys through this play so you can figure out how I did it. It's about 260%, somewhere around here. And when it was probably at like 220%, I shorted a put. Okay, so I sold a put, just like selling a cash secured put. I just sold a put with the collateral of my long put. So my long put's the one I bought, and then I had a short put that I opened up. So that short put, the put I sold, it loses value as the stock goes up, right? Or just with time decay if it's out of the money. I opened that one up right about here yesterday, and then it did this and it did this, and that put went up in value, so I was losing money on the short put. But I was like, there's no problem. I thought we were going to bounce. I actually opened up a debit spread also, a call debit spread yesterday about that same time, expecting a bounce. The reason I expected a bounce because this RSI was way overbought, or way oversold, way down here, 17. That was yesterday. Opened that up, was down initially on it because I opened it up a little early, came down, and then this morning it was a gap down on Tesla, but then just rallied up 4%. I closed my debit spread, my call debit spread about right here. That's a fib level, as well as it just looked like it was kind of holding resistance. I thought it could have rallied more. I just wanted to get out of it. And that was a $600 gain on the call debit spread. And then also at this point, or was actually might have been later. Yeah, maybe it was up here more. I closed the short put. So what that did was it freed me up to have a naked long put again. So now I just have a long put here that has unlimited, well, not unlimited, but basically if Tesla goes to 0, that's my max profit on it. I'm not expecting that, but yeah, that's what that is. The short put that I sold, I received, I don't know, 2,300 or something premium. You watched yesterday's video to sell it. It lost value because Tesla went up, and then I bought to close it at a cheaper price. And the difference between what I sold it for and what I bought it back for was about $820. Okay, so I made $820 in the short put, and now I have a long put, so I still have exposure for 16 days for Tesla to get this in the money. It also I paid my cost basis on this long put once more, and we've already made, I think, $1,500 on the credit of opening up the short put. So I don't think I'm adding that too many times. I think that's about right, but I might be adding it one extra time. Kind of confusing. But anyways, now I have a long put, and I'll probably do this again. We'll see what happens with Tesla. It might consolidate for another day or so, or it might dump tomorrow. I'm not sure. It's kind of low on the RSI on the hourly. Maybe another day of consolidation and then kind of come down. But I wanted to close that short put just in case it did sell off. And not to say that that short put won't expire worthless at expiration. Tesla just has to be above the strike on it. But I might as well close it now if I think it's going to keep coming down. When it comes down, if it comes down with another 10% day or 12% day like we had, I can open up another short put for the bounce. It can bounce. I mean, this is all theoretical, and if everything works out perfectly, it can bounce. I can close that short put for the gain and then ride the naked long put again. So we'll see. I mean, this is a pretty good looking, a lot of momentum, a lot of volume, kind of a bear flag. I mean, we've got the hourly is just oversold a little bit still, but this huge candle that we had yesterday, that's just a ton of momentum, and that's not going to be reversed quickly, if at all. So it will be slowed down though, and that's what today is. Today is a consolidation, a slowing down, because that thing fell off a cliff. That's why I thought we'd have a bounce, which is all a slowing down can be sometimes, just a bounce. And we might have even a little bit more consolidation, or maybe even a little bit of a rally before it comes down. But to me, it looks like just kind of consolidation, then a drop. And that drop might be tomorrow. We've got long puts for it. That's the Tesla play. So I'm kind of milking this thing on and off, and yeah, hopefully it works out. I mean, it's worked out good so far. So I might kind of do this more legging in, legging out. I've done it sometimes, but it's easy to do if your initial position does well. If your initial position does well, you're up 100%, 200%, whatever, then it's easier to kind of finagle and squeeze it more. Because yesterday, the huge drop, I was like, I've got to take advantage of this 10, 11% drop. The premiums are crazy. I thought there's no way it's going to drop another 10% tomorrow, even 5%. Got to bounce. But I didn't want to sell the position because I still believe in the play. I still think Tesla's going to come down dramatically in the next 16 days. So that's when I sold the put, so I could capture premium on the upside. So then this whole bounce right here, I basically caught the premium that I lost, because now this put went from 100 and or whatever 260%. Now it's only up 74%. But I made the money on the bounce with the short put. So even if this thing expires worthless, I think we're still up on this play, like 1,600 or so. So I don't think it will. I wanted exposure to the downside. Tesla is rallying though, so we could have one day of rally. Kind of relates to the overall market. Anyways, that's the Tesla legging in, legging out. And then we also have this call credit spread on Tesla that should close at any point. I've got a close order on it for minimum, but it doesn't want to fill it yet because I still have 2 days. And market makers know Tesla could just for some reason rally up to 1230 out of nowhere because Tesla's crazy. That's that. Didn't do a whole lot. Sold those shares, so kept it pretty mellow today. GameStop, I didn't tell you guys my positions really yesterday. We have a call credit spread. This is a bearish play we've had on GameStop for 3 or 4 days now. Ever since TA said it was going to come down, it's been coming down, and the strike on it is kind of aggressive, so it's kind of hung around this 40-50% area for a while. Tomorrow it should lose a lot of premium, especially if it's out of the money further. But yeah, we opened up, I don't know when we opened up here, maybe. But yeah, So that kind of helps capture some gains on the downside since we're losing on the shares, as well as this call debit spread. So this call debit spread I still have 280, 350 call debit spread for next week. Cost 6,400. Max gain on it's 140,000. That's if it goes to 350 by next week. I might leg into the, or not leg, but average down on this if everything reverses before this expires. We'll see. Or I might just eat the loss. Hard to know, but so far it looks like GameStop's going to keep coming down until it doesn't. Didn't do any covered calls on GameStop today. Have some long calls, 470. These are part of that call credit spread. Space call UVXY up a little bit. This is a hard play to catch. VIX, it's weird. The VXX is swung. The first day I opened it was up 100%, then it was up 50%, now it's up 25%, but I think that thing's only climbed, so kind of strange. And I don't think it was the spreads either. Spreads are tight, so not sure about that. Pay safe, yeah, I don't know. Crocs put. Man, yeah, so I'm ready. I am ready. My long term's gonna hate the market crash, but I think it's coming regardless. And the ultimate hedge of GME, I am well positioned in. Thanks for watching, guys. We will see you on Discord. Peace out.